Hey everyone, welcome to your daily update for SOL and BTC. Something is coming. There's definitely something coming. So we've got a lot to cover today. There's a ton of different time frames, and some of the really big ones are pointing right up to the sky, and unfortunately, some of the other ones are potentially setting up for a sweep of the lows. So starting just with the liquidity. Uh, there's liquidity to the downside and the upside. So, like, to be fair, the 1 day isn't really telling us all that much, other than it might go and try and hit that 114 area. And downside wise, yeah, they could easily go down and hit that 109. So that would just be really short term type stuff. With Sol, there's definitely more to the upside to take, and one of the hold levels today that potentially could send price to um, that 123 area is about 214, and it's just interesting the 1 day liquidity sort of just goes all the way up to about 214. So don't know if I like that confluence, but hey, if it happens, it could end up being one of the best shorts that you're going to see. Uh, but here's the but. What are they going to take to the downside? So on the 1 day, there just isn't really a lot there to bother with. So if it was to go all the way up there, I guess you're assuming that heading up to 214, so many people would jump in to chase it that maybe they then hit the hold level and then dump and just don't stop. Um, but some of the really strong levels that are forming today are ranging from 189 all the way down into the 170s. So it doesn't seem like there's a point to go down there, but if they do go down there, then there is some new structure on really high time frame stuff that's forming down there. So if we look at the 7 day, you know, 7 day, there's definitely an excuse to go either way on Sol, and that's where suddenly, okay, well, we might not have a lot of people longing right now on Sol, but there were a lot of people longing over the last 7 days. So whether or not that's going to get swept is another question, but certainly looking at that liquidity, looking at the shorter term structure, could well be happening. Okay. And looking at the 30 day, 30 day definitely looks like it would be worth sweeping to the upside, but you can see that big cluster of liquidity on Sol there that goes down to those 180s or 170s. And for BTC, that would just be kind of like revisiting the 107 area again. Um, and to the upside, it would sort of be like going and hitting those 120s. Okay, so let's go and have a look at these charts. So daily SOLBTC Strength. Um, so at this stage, it looks like it's trying to pull back in under the daily trend, which would still be above the support trend. So really, it's a case of if it closes in that little area there, it's just compression, and you normally get a lot of compression before you have some kind of big breakout. So it doesn't tell us whether it's going to be a break to the top or a break to the bottom at this stage. But if it was to come down a little bit further and just close under the trend, then that would signal more of a chance of it breaking down. The hold level body that's down here at 16723 hasn't actually been hit. So this is one of those little weird gaps that, yeah, if it does come down close under that trend, then you'd probably see a drop down to that body, which would have confluence with the next ladder or the next layer of the trend. So, and of course, with 2 hours to go, nothing stops it pulling back up, bouncing, and then trying to go back up to attack the break and attack the further breaks up here. So, you know, with crypto, basically, the closer you get to some of these closes, the more, it just ends up sitting on the edge of a knife. Like it could just pull up just a little bit and then be in a position of strength, pull down just a little bit, be in a position of, amplified weakness, let's call it. Or it could just stay right here in the middle and just continue to compress, and you could have just an absolute boring, day for the next day. So that's all we're seeing there. So let's have a look at these safety assets or dominances. What's this one? Dominances. So on the rise, not what we wanted to see. Looking at a hard close of this lower region, so that's 65.94 area appears to be, unless we have a big pullback today, appears like that's going to get hard close today, back up above the range trend. And so then the next area of possible rejection, did it touch there? No, it didn't touch there. So the next area of possible rejection here is going to be the break, which is converted to an origin, and that is, oops, scroll wheel. Oh boy, technical difficulties, scroll wheel sensitivity. 66.72. Okay, so now this could get really bearish really quickly if it closes up over that in the next 2 hours. So if it closes under that, then you might get a bit of a pump, which could be, a sweep or a dump of the alts, and then a rejection back down. This level being converted to an origin level will actually be able to break these trends, but yeah, as it currently stands, it could even creep back up over that. The other thing we're about to see here is a trend break of a very steep interior. So typically, if you break a trend, you target a hold, and you either target a hold or you target a break. You might be about to see another push up to that 68% area, and if it actually gets up and over this 66.72 and breaks the trend and is above the level, which technically should be resistance, but could flip into support if it closes above it, and then it could retest the prior broken trend, all confluent with this going back to 68%. And yeah, if this goes back to 68%, that's another one of those big nasty alt dumps that you're going to see, like when you had that spike up there. It wouldn't necessarily be as bad because that spike was a bigger spike, but we don't know what this will actually do. So does it just do the retest of the trend, hit the break? Maybe that break becomes an origin, gets rejection a couple days later, could be higher time frame resistance. We don't know, but certainly, I said it in the Discord earlier today, just check your stop losses on your longs, because this is in a position of very much taking another dump across risk assets. Okay, let's have a look at the totals. Okay, so we won't go too far into this, but if it closes under that trend, that's not good. So it could come back up, bounce off the backside of the trend, maybe you just get a little bit of a move, a little bit of a relief, and things go green when the day opens or something like that. And then rejection off that trend could just lead it back down. So this hold level up here, which we rejected off yesterday at 1.56, it's definitely doing its damnedest to break the trend. So next level will be that 1.45 if it tries to recover off that hold. It may create a range trend. The range trend could bounce. It could target this hold up here. So, it's not doom and gloom. Like, the market's not over, but just be aware we are pretty much in a downtrend. Even if we just roughly draw that across there, and it's not a perfect trend, but as you can see, you are in a downtrend. So until we get through there and reverse, it's looking like it wants to take another dump. Okay, let's check this on the, yeah. So if we look at that from the DXY perspective, it's pushed down underneath the trend. It's on the wrong side of the uptrend again. So this has already tried to recover off the hold level, and so it's very structurally different if you compare this, or these two different methods of looking at the totals. We still have the main support down here, like that 334 area, but closing under these levels and closing candles in these positions means that ultimately it's probably going to have to find something to bounce back up. And we are very, very close to what's that level there? Yeah, so it may be trying to push down under 340 What's that now? 340.25. So yeah, if it pushes down under that level, then a rejection off the backside of that level could give you sort of a bit of a sharp drop, a bit of a move. Okay, so yeah, and if we look at it, total risk assets minus main stables, it looks like it's in a position to open the candle on the wrong side of the trend, unless this pulls back up a bit by the end of the day. So it's also underneath the break level of the range again at 3.46, which is not actually an origin level, so it's not that big a deal, but this level here is, and that's 3.45, and the price is sitting at 3.45. Did I get that right? Yeah, 3.45, and the price is sitting at 3.45. There's bigger numbers, they only put 2 digits here, but there's bigger numbers behind that. So we are slightly above it. If it gets down and closes just below that line and opens the next candle, then yeah, you could see a bit of a rapid push, because effectively it's under the downtrend. It might open on the wrong side of the support trend, which actually is also a range trend, and it could even open on the wrong side of the origin trend, the origin level. So then it would have to wick down to this next level here, which isn't a huge drop, but the thing is, you don't really know exactly how far it could go down. So 3.41, it could find some support there like it did previously, and then of course you're into 3.38. So these are all support levels, and this one here at 3.33 is the new one that has been created by the big dump that we had in that candle there on Friday the 10th of October. So it may be coming down, or it may try to come down as far as that even, which would also have a trend. It would also have a range trend and another range trend. There's a whole heap of support sitting there at 3.33. So if this closes poorly and then has a bit of a dip, it may come down and just test everything in that area, because there's just a whole lot of confluence. It's also going to be a prior broken trend. Yeah, so it's basically range trend, range trend, range trend, normal trend, new origin level on the daily, and prior broken trend all converge in that 3.33 to 3.32 area tomorrow. So it's assuming it closes down and badly. Okay, let's have a look at BTC. Okay. So after everything I just said, which just ultimately comes across as a bit shock, drama, and bearish, if we look at BTC, it actually is still up inside the support trend. It has failed, assuming it doesn't move back up. It's failed to be in a position to break the downtrend on this candle. I mean, it actually couldn't have anyway, based on where it opened. But it's not actually a lower low. So from a daily ranging perspective, we've come there, 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 there. This is still technically an uptrend on the daily. So the next question is this just going to be another liquidity sweep, some kind of fake out, and then does it explode up to the upside? It's very possible. As far as what trade you could get out of this today, it hasn't actually tested the daily range trend, which is down there at 109.9. And if it does, it also hasn't tested the body of the hold up here at 114.873. So there is a trend in the way, which is going to try and stop it. There's obviously these origin levels that it rejected off yesterday at that 113309 area. That was the one we said, hey, it's probably gonna, if it closes below here, it could reject off it. But it's not absolutely saying that it's going to dive lower than that 108 area. So this we're sort of assuming is just a liquidity sweep. So and if it is a sweep of the bottom of the overall range, really you should be expecting to see it come up to the 130s. So as bearish as it looks, and some of these time frames look really bad, some of them actually look good. Just the character of what has happened in the market, taking all that liquidity, I still think the really normal thing to do would be to go put it back up there. So, you know, and go hit that at 134. But if you're on leverage or high leverage, the issue is that, yeah, they might actually take another dive down. There is so many levels of support that have now converted because of that that action. So if we look through here, you've basically just got so many origin levels layered over each other that you can't even read the text. So if they do a sweep, even if it's to half the wick, so maybe they go down to this sort of cluster of support down here at about 105, then it just really should bounce. And probably the earliest place that it could bounce from would sort of be that 109. But certainly if they do go and grab some more longs, it really should bounce. Okay. So now let's try to figure out if that's actually what they're going to do. So this level here that it's already bouncing off at 109,919. So this is an origin support level. It got wicked through, came back up, you know, etc. We know all that. We then moved up, retested the backside of the trend. Now, I think if this closes like this and does not create a hold level, so that means BTC closing over that 110574, then the trend will shift. And if this trend shifts to here, we can bounce off that trend, come back up, and retest these upper levels. It could actually kick off the entire move up to an all-time high. But I do think you'll probably run into some kind of rejection when you get to this this level up here. Definitely some kind of rejection at that level when you get to that 124,539. It could also just be this is it, and you know, maybe this is the final range of the market. It's hard to say. If we were to just say absolute bull case, we shift this trend, we bounce off this trend, we're going to first target this hold. That's going to get you a move to somewhere between that wick and that body, which is basically, you know, the 119 to 120 area. If it gets through that, it's going to target this range trend up to the top side here. It's going to target the origin level up to the top side there. And then if this becomes a blow off top, it's going to go straight through that, and there'll be some big wick, short squeeze, etc. And everything that they just took down here, the billions of dollars, you know, etc., that they've opened, will most likely get sold into something up here. So that's your absolute bull case. Bear case, of course, is that this thing just comes down a little bit, and it doesn't have to come down much. So if it closes under 110574 for the day, or worst case, it just gets really close to having no wick so that the next candle can open on the wrong side of the trend, then it can use the trend to try and push down and break through these lower levels. And that's where it gets, you know, very bearish, because this as it currently stands, we're actually breaking this trend today. And if it wants to try and go all the way to the other trend, Well, the other trend is down here, sub 100K. It's in that 94 area, and we've spoken about these targets before. We know they're there. We don't know if that's where we're going today, tomorrow, the next day. You just don't know. But I think you have to plan for both cases, because breaking this trend, relocating the trend, means we can bounce the trend to go up, sure, but we are still breaking the trend. And that also means that the bounce could stop at the backside of the broken trend, and then down you go. We could also just create a hold level at the same time. So I'm probably repeating myself, but we could create a hold level today and reject off the hold level and then continue to the next trend. So there is actually just as much case for this to go to an all-time high as it is to go to an even lower low. And it would just be sweeping the range. So, range theory, there's your final hold. We haven't tested the final hold yet. This is pretty much all ranging. If we do come down and test the final hold, which would be under 100K, that's actually entirely normal. And then you either come up here, and that's kind of like your head and shoulders, funny head and shoulders, or you end up breaking out through the top, so that's totally on my radar right now. Okay. So we've still got support on the 3-day. We're going to move the trend, same thing, could bounce. Then if it does bounce, 117, 120s, 124s. So that's the sort of areas that it could reject off. And if it was to sweep the range, so sweep the whole thing, it would be down here to 93. So maybe 98 if it goes to the other trend. So that's sub 100K Bitcoin. Okay. So this should have, so on the 4-day we're creating this origin support level at 108.577. It's still above the range trend unless it comes down a little bit further. It's not going to move the topside trend, and you can see how the price just wicks up through these, but as the 4-day candle plays out, it retraces back down. So the next 4 days could also be a wick up through that, and then within 4 days it could retrace back down. We're also creating origin resistance at 117.855. So if this gets back up above before close, so that would mean like a 112 close, it might bounce off that trend and head up to that 117 area. Very possible. It could just do what it's doing right now and open around here. Then it could still actually go all the way up there over the next 4 days, hit the resistance, and then grind back down again to be under the trend by the time it closes. So that's also possible. And it could also go down, test the new origin support level, and then bounce back up. So there will be trades in this. But I would just say, if you're going to open anything on leverage, have a really decent stop loss, like a close stop loss, but also just be prepared that the way this candle moved, they could do that same thing again to sweep down to this area here, because it's got the same confluence across every single time frame that we've looked at so far. You've got a range, you've got the hold of the range, you do that. Right, so just bear in mind, you might be seeing, this is telling us exactly what the other ones are telling us. Okay. So 6-day. So 6-day is still above the range trend. It never quite tested that one. It just missed it ever so slightly. it's not actually breaking out of the downtrend because it's not had a proper accumulation candle in 6 days over that downtrend. So the next candle may just simply come down to try to get under that trend again. So that's very tricky structure. The origin support level there, 107,400. So yeah, it may bounce there, or it may wick through that. The matching resistance level to that today is 120,826. And actually, this then converts that 124,539 becomes a 6-day origin level today. This is very similar to last bull market in 2021 when that level there became a 1 week level. We then went down, tested the range base, went up, and that was a huge drop on Bitcoin. Last cycle, but yeah, when I think it was, here we go. So basically here we had that, it converted, we had this huge drop, it came back up, went over the top of it, and then you got, that's when they sold off the last of the positions and then down into the bear. So this is looking scary. Thing is that there is actually basically that structure already. So down it went, up, failed to close over it, huge dump. So yeah, tough to say it, but it could already be the bear market looking at that. The thing is, you just never really know until these levels start to break, to the downside. But structurally, that could be the bear market. It just didn't have that much of a drop before it went down. Didn't really test the bottom of the range. So we'll see. Okay. So 8-day, if it doesn't close back up over 114,246, we get a hold level. We are underneath the range trend, except I've used the wrong type of style for that. Okay. And we're slightly above the old historic range trend. So you could open the next candle, have a dip, and then move back up into that hold. We're not actually moving the interior trend on this today, so we're not losing that. So my guess is that the next 8-day candle may be the one that ends up moving the trend, but that also implies that it's going to end up closing down, over the next 8 days for it to even be able to move that trend. So the real bull case here, if you just wanted to throw one out there, is that we have this untested range trend that heads up into that 130 area. This is the original range trend from back in November of last year. We are technically up above that. The anchor points for this range trend are just November and December candles here and here. But as you can see, it's just, we've lost it before, and when you do, you have a big dump. We've regained it before, and then you bounce off it, you have a decent pump. And then it's been respected, on all these candles the whole way through here, including this one, perfect touch, this one, perfect touch. So this is a sweep of it. The bullish case is that we open, we hit that, and then we have, a bullish move up. And this particular trend was capable of, breaking through that hold level back in June. So it's not to say that it can't break through that one there now. But we're also converting 124,539 to an 8-day origin resistance as well today. So even if this just really starts to pump and there's a whole bunch of euphoria, etc., you're probably still better off taking profits at that level as soon as it gets to that level. Okay. Don't know if I'm going to get this video out in time. Too many time frames today. Okay, we do not want this one to close below 109,574, and where it is, it will definitely create some kind of compression. We've got a range trend support. In fact, there's just so much compression in this. Just when it's underneath one trend, it's just above another one. It's kind of going to open on another one. It's just nothing's technically broken to the upside. Yeah, so much compression. So something will come. It's either going to do a sweep down. We've got things like this range trend. There's so much confluence down here. This is the thing that just is a bit, yeah, a bit troubling. Just when it comes to, yeah, a lot of people probably, if they survived that last big dump, mentally whether they can put up with another one, but there is confluence. We've got prior broken trend has not been retested, range trend broken and hard closed has not been retested, and they're both down in the low 90s. So, but it just structurally, it's not the kind of thing that it can just bleed to it. It could just do another big dumpy run, some tweet, but it's yeah, be conscious of those targets. And actually, someone just brought something up in the group that if the government's reopen in the States and they release a whole bunch of data, and it could be really different because we haven't seen these incremental updates for a while. So maybe it's really different from expectations, and then it could go one way or the other very quickly. It'd be a great excuse, for them to use to push the button. Okay, let's have a look at the so the 12-day. It's basically just threatening to close under that 110,871. If it does, then it's closing underneath the range break, and then you can reject off the backside of anything there and go down. But it doesn't really even have to do that because it's creating a hold level at 115, 191. It's back underneath the range trend if it closes down at this low, and it's just above the other range trend. So just once again, it just shows that there is an intense amount of compression that's happening right now, and this is gonna break, and it's gonna go one way or the other. These time frames have got things like untested range trends, but to be fair, these are down in the very low 90s through to the 80s. So I think people are gonna definitely cry if it goes down there. Okay. I reckon we will find a bullish time frame eventually. There's so many today. This is really bad. So I shared this one already in the Discord. This is potentially a distribution hard close of that entire top range. So this is the kind of thing that can trigger a dump. And the next range trend is coming through here. I would argue this is retested though, because it was hard closed in May and then it got tested, which created the next range here in June. So I'd argue it's been tested, but it's just got basically perfect confluence with the exterior trends today. So this potentially is going to open on the wrong side of the trend. It has already hit the break level. All of this stuff's retested. It could come down to this other trend. That's your 93, 94 move by the time it hits that. And that's a very strong trend through there that's held it for a long time. So, if it came down and just gave the same amount of wicks that you've seen previously go through these trends, that would hit this. So we do have a untested range trend down here at 89. So nothing's out of the question if this goes in that direction. And the bullish scenario is that it bounces off the reverse side of this interior downtrend, which is only about 107. So basically a dip to 107 is a very bullish dip if that's where it stops. If it doesn't stop there, then, hey, we knew that that was a possibility. And if it doesn't stop at 107, I would be inclined to say that you should be looking sub 100, looking at some of these timeframes. And it would also be very possible if we have a nice pump to be heading back up to those 120s and above. But let's next, like this as an example. So this may close just high enough to have a hold level to the upside. So it has to close over 111491. Now, you can still create a hold level, like see this one over here. You can create a hold level and you can go grab all the liquidity first and then go to an all-time high. And that is a possible scenario here also, and that would be confluent with those other timeframes being lower timeframes, is that we might create a higher timeframe hold based on the lower timeframe, go down, grab all that liquidity. We've got 101 targets based on this. It doesn't really have a huge reason to go below that, and if it does, it's much lower than that, but it could create this hold, sweep, then go up, because there's a couple of really weird things that have gone on with this time frame. One is that it didn't actually test the trend at the top, stopped just short. I have a bit of a theory I'm working on at the moment that exactly the same thing that creates origin levels, which is fail to accumulate or distribute back to the level after the creation of the level. I have this theory that potentially the same thing could be happening with trends, and in which case, that trend would actually be a very, very nasty trend, and it could sweep through it and then have a big rejection. But we'll see. At the moment, it's just tin hat stuff until I can back test it enough. But it's yeah, this could create an upside hold level, or they just keep it where it is, doesn't create the hold level, and that's quite bearish if they do that. There'll also be a new range trend come in to the top side here, and that would create further resistance if it went to try and get up to that sort of 126 to 127 area. Okay. And then you go one more time frame along, and guess what? We're bearish again. So we're looking like we might get a downside hold level. This is rejected back from the trends, the range trends, basically everything in this time frame is in rejection. It has retested the hold. It hasn't clearly gone back to 80k, which is the next hold. We've got the trend and the prior trend to retest. They are between 95 and 91. And realistically, this thing, if it closes below 112.529, could tap that hold and fall to these trends. And there'll be a tweet or something. The other thing it can do is it can just bleed down anyway, and that becomes kind of like a reverse move where it just goes anyway, finds these, and then bounces back up to that hold. But all these trades that have happened over the last couple of days, where we've just said, hey, we're moving a trend, we're creating a hold, you'll get a move between these two levels. This is just the same thing, bigger scale. Right? So bear in mind that's happening. Okay. And this has got the potential, if it comes down just a little bit more, to be on the wrong side of all the interior trends, which could trigger a rejection down. So, and we've got the wick of the whole candle starts at about 92,780, which is a bullish bounce. So that's the kind of thing where there's tons and tons of people who have been waiting for this sub 100k Bitcoin, and it never gets right down into the body because there's just too much greed, so it could be like that. Or the demand ain't there, the liquidity ain't there, market makers pull their liquidity again because of too much risk, and then you see, it goes down into the body. So, but yeah, it's definitely in a position where this can come down. So just be very careful these coming days. Okay, 36-day below the interior. So that's the interior resistance trend, I should say. And in a position that, it could move back up, test one of these and fall. And if the next candle closes up in the 36 days, I might have said the wrong days there, but if this closes up, it can still then create a range trend, which becomes the top of the market somewhere in the next 36 days. So really it's not giving us too much stuff to work on. The wick of the whole candle, which is this one here, as you can see, that created that bullish bounce. So I probably wouldn't expect that exact level to hold again, but maybe the greedy orders down inside the body, which would start at about 96.5, could reverse the trend, so, or create a new trend. Okay, wrong side of everything. 99, 95, trend. Under everything, not creating a hold level, thankfully. This will create a new interior trend through here. It'll open on it based on where the price is now. So as you know from the last couple of videos, opening on is 50-50. It could push up, it could push down. But if it would have to come down a lot more, really. Well, it'd have to close under 107 to be really problematic. So, but yeah, that's actually a little bit more bullish realistically than some of the other time frames. Okay. This stuff's getting huge, but we've got confluence of levels. We've rejected the backside of this trend. We're closing in distribution. The body of the hold level is 93,570. The trend will try to support the price, but it's no different than what you see here. We get the dip down below, and then whoomp, up she goes. We could get that dip down below, and then off you go. Like the sound effects, put something in the comments. Whoosh. Right. 144, rejecting off the trend. It's done a sweep of the liquidity. Nothing changes on this time frame really today. Okay, let's get into SOL before we run out of time in the day. Got to find a way to make these faster. Okay, so under trend, under origin support, not good. Body of hold down here, 188 or lower. Range trend down here, 182. Main trend down here, 170s, 174s. Okay, if it closes like this, even if it pushes back up, it's probably just then going to reject. Okay. Unlike BTC, it's not moving the 2-day trend, so it's just simply failed to recover it. If it pushes back up and hits the backside of that, then that, in fact, it could, this stuff can get really bearish really fast if it wants to. It only really, where it's closing is under the downtrend. That is a very old origin level there that created a lot of chaos, and that's sitting at 196.184. It doesn't really have to go any higher than that. It could just hit that, reject, and go down. What's very tricky on this though, just very sneaky, is that we haven't actually hit this break. So 190.753 is a support level equivalent to 196.184, because that only went to 191.039, so it didn't actually hit it. So you might see some kind of action just between those two. It's only $6 move, but still it could be a tradable $6 move. And I think we're losing this range over here. Definitely losing that range. It's that 180s. Yeah, it's probably going to target. Oh, this is tricky. So it has got support at 190, but we're also hard closing and losing this older range. So if it retests that, it's all the way back up there in the 219, 220 area. If it just falls to try to find the next range, then it could be anything below that level. So basically anything 175, which is the origin support level at the bottom of the range that it's basically losing. So just I would definitely have short-term thoughts that this thing could be moving anything from the 170s up to the 220s over the next few periods of candles. So that's it's quite a wide range. So okay. So the 3-day rejected off the backside of the 3-day trend. It's going to hard close and lose that range, and logically it makes sense for it to come down and go to this 180 area, but it's also going to be, sorry, that's 186 area. It's also going to be on the wrong side potentially of that interior trend, which means it could drop to the next trend, which is the 170s. So just keep in mind that thing could, and that'd be a half wick fill. And if you've been around in trading long enough, you hear people talking about these half wick fills, you know, etc. So that rejecting 177 hasn't technically lost that range yet. Could retest the backside of the trend. It is creating origin support on a higher time frame in the 160s, so 161. Didn't test the body of the whole candle, so that's quite bearish. Okay. Oof. Need a new sound effect for that one. Okay, so that's really bad. Closing underneath. So it's gonna have a whole candle. Wick 197, body 203. It's gonna be under under a 6-day origin support level, 199. And it's got a range trend to try and support it at 187, but still that's pretty bad. Trend above 210. Yeah, it's hard to see what they're trying to do here, because this could actually go and retest trends all the way up to 226. And yeah, or it could dump first to 160s. So yeah, okay. This is not completed yet, and so this is the 7-day move from yesterday, but as you can see, rejected off the whole candle. It's pushed down through the trends, sort of expecting this to get to 190.6. There will be significance in the fact that it has not done that yet, so there will be something in today's closes that would be affected as far as structural creation if it was to do this too soon, which is probably why it's kind of hovering there. But it may do it either just before close, just to be tricky, or it might or it might do it immediately after close, but yeah, still really, I don't think anyone should be expecting any upside until this thing's complete anyway. Okay. Yeah, so this is going to have a backside hold, frontside hold, 204, 212 for wicks. Origin support level 176.3. Trends, basically that 176 to 180 area. Okay. 9-day. Looks like you're going to get a 9-day hold if it stays under 203. We've got an hour left to go for this thing to pump and make all this irrelevant. Otherwise, there's definitely resistance forming. You know, this was a 9-day hold, by the way. Push ups into it. Dump. Dump, dump, dump. Okay, so it could also be underneath the base of the range if it closes below 194.10. It'll also be under the range trend. Don't like that range trend so much because it came off a doji, but it is still a range trend. Yeah. Potential trend support in the high 180s, 188 sort of thing. Failing that, it's down to the 170s. Yeah, 176, 179. If it really does pump to the upside, because it's not shifting trend or anything today, but if it really does do a pump to the upside, you've got another origin level there at 200.170. Yeah. I just don't know. I just don't think I wouldn't expect this to go back to that whole candle body. It's just seems too bearish. And there's all these other things that it can reject off earlier. So, yep. Okay. 12-day. Well, it's sitting in between two trends. It could open. So this is really tricky. It could open above one, bounce up to the hold, or it could open above, just bounce to the other trend and then reject, or it could pull back up before the end of the day. But it's just another level that looks pretty much like it's on the fence of collapse. Okay. Either way, there'll be a whole candle on this range starting around 214 to 217. Okay. So 16-day is already in rejection. So this is, so that's complete. The short from January is now complete to 158. And this is clearly complete because that was only 195 and it blew that out of the water. So it hasn't actually lost its range because it would have to go below 137 to do that. It is still above the origin support, which is here at 176. So I think 176 is becoming a pretty key level across a lot of this stuff. If it was to dump to there and bounce, then that could take it back up. Still got a break level there at 220. And yeah, that was your origin rejection up there at 247. Okay, so that's, there's no other levels in there. Okay. Back below the interior downtrend, next candle, so compression really. It's going to open in the middle of two trends. Support starts at 176, like most of the other time frames. 24-day, hold level, wick at 194.1, so that's confluent with other timeframes, body at 214, above trend. So you could see an initial move between wick and trend or body and trend, or the dip first and then back up. It's a pretty big time frame, so it could sweep and then go back up. But so this one is probably the most bearish time frame I can see in the shorter term, and that's simply because you've got this whole candle from January, and the target for the fib move here is 123.532. You're now getting the second hold forming, and so far that big dump we had was caught by the trends, so that was good, but it is ultimately trying to come down here to 123. And I spoke the other day about how me and this guy were talking about the 144 level, and how that 144 level, there was this little gap where the body of the whole candle wasn't quite touched, and it was left behind, and for a long time we were convinced that SOL was going to go back to 144, and that was based on, I think, a 3-day chart. So exactly the same concept. You've got this level of 123.307, and you've got this candle which went to 125.919 and just left this little gap here. So it took the wick, created a bounce up in here, but the body hasn't technically been touched yet. So if we do get some really shock event, that's the area I would be expecting to see this go. And the thing is, if it does that, it is still actually laddering. So it's not a bear market, even if it does that, which is because this is your ladder point back here, which was 101. And that's this entry. And then it's come up here. And it hasn't hit the break level at the top. All right, so therefore it is in a range, which is here to here. And this is the ladder point that's caused this. This is going to become a ladder point to try to come back down. The next available ladder point that hasn't already been tested is this. It hasn't hit this break level, so that tightens your range. If it spends a few, like another couple of candles in here, which is boring, I know, but let's say it does spend another 24 days in this price area, then you'll end up with a break level there, and effectively you are compressing just in a really high time frame. So yeah, hopefully that makes a bit of sense. But short version is, don't be scared if it goes to there. Buy it. It'll probably bounce. Anyway. Okay, 32-day. We don't want this to have a hold level, which means we want it to close above 191.782. If it closes below one, if they do what they typically do and like push it down in the last 5 minutes or push it up in the last 5 minutes or whatever, just be aware of this thing. So as far as levels that could catch this, you've got this origin support level down here, and that's at 127. You've got the range trend running through here, and you've got the next array of the standard trend all down here in the 130s. So just yep, that's what it is. There's also technically going to be some kind of range. That is also actually a type of range trend as well, which is in the 140s again, and that could create some kind of double bottom. One thing too is that BitGet went to 140s. A lot of other exchanges didn't. And yesterday or the day before, we saw BitGet pump to 210 and then reject. And it did it in like these couple of 1-minute candles, almost like it was some kind of system glitch. And then guess what? later in the day, every other thing went up to that same level eventually, and then we rejected. So just tin hat theory, but this went where a lot of other exchanges didn't. It is structurally significant. It could mean other exchanges over time are actually planning to come back down here. Just a thought, anyway. Okay. 36 day, going to get a range trend. That's going to be down in the 140s. Hello, darkness, my old friend. It also didn't quite test the trend. It's not hard closing that. It's potentially creating something. Where's that coming from? There. So it's basically putting a whole heap of emphasis on these 140s. And the origin support level for this range, if it was to test or sweep the bottom of the range, would be 126 or lower. And the top side origin level on the local range is 264. And on the old historic range is 243. And yeah, so we've got a trend to retest. So we've got the backside of the prior broken trend. Is it around that 214 to 218 sort of area? So there's a lot of room for that thing to move. Okay. 48 days under the trend. It's bounced off the hold level, it's bounced off the trend. I mean, just from a 48-day perspective, it's really just in this wedge. So if it was to go back and visit the trend, that would be down into the 150-ish area. If it was to go back and test the origin of the range, these are some pretty scary numbers actually. When it goes back, if this actually goes back to test the origin of the range, it's 109, and it's really possible too, because you've got the top origin of the range here, which was a 2021 break level, hit 3 times, failed, retouched. This is the equivalent strength level, and it's 109. So yeah, if this loses trend, it's gone there. Okay. And now, just to be really confusing, see, it's worth watching all the way to the end. We're going to get a 175 hold level, and we're going to be opening in a position where we could actually bounce that hold level and travel up. So, and we haven't retested the prior broken trend, which is all the way up here at about 286. And so that's that full range that we've spoken about. We know we've sort of got a heck of a lot of confluence around 123s, but we've also got these targets that we haven't gone and hit yet that are up there around that 286. So this time frame could kick that off. And all it has to do really is go below 175 to start the process. So it's, sorry, below 175.794 to start the process. And then we've got this, which is 189.270. If we close above 189.270, we have a broken trend to retest, which is 302 roughly. We're above the range trend. This is a hold candle on the backside of the bigger range with a minimum bounce target of 242. But most likely that's just because that's just a minimum target. Most likely it will come back up here to test the trend. So just putting it out there, we have we got a bunch of time frames saying that we could go down to levels like 123 or lower. And then when you really get into the bigger areas, we've got stuff that is pointing to all-time highs. So, yeah. If you're wondering whether I'm confused, yes. I can't tell you which way this is going to go first. What I can tell you is to plan for both. If you see it epically diving, there will be some really good buying opportunities if it does that. If you're a spot holder, you're probably fine, because one way or another it's going to be up at some point. But yep, I'm just basically going to keep on trading some of the smaller stuff because it's much easier to scalp it than it is to consider this. And yes, there will be a point at which the stop loss gets hit, because that's just kind of inevitable. But it's about the only way I can think to play this right now because the ranges are too big for any large positions. Okay. Last but not least, more confluence, 189.270. Another hold level above the trend, which is actually both, above the range trend and 260 something, 264, 265-ish for the next level of the trend above. So, and this time frame has not lost its uptrend. So, this could open and bounce. If there is, China is giving us an amazing tariff reduction tweet. US does Bitcoin reserve, blah blah blah. I don't know, whatever it would be, but they've got the structure to bounce, and it's sitting on these really high time frames that no one ever looks at. So we'll see how that goes, because they've also got the structure to go down right now. It may even be the 1 week of the year where it's better just to take the week off, but certainly just be careful with leverage. All right, little quick look at what's Tesla up to. Well, it's a doji, so it's not really doing anything. If it are we breaking the trend? We are kind of breaking the downtrend. So you're sort of breaking the range trend. So this might push up and try to attack. What we got there? 438, 441. Or if it travels up to that range trend, you might get this going back up to the 460s again. And that 465 level, if I was trading this rather than long-term holding, but if I was trading, I'd just look to de-risk at that 465 because that would be a daily origin resistance level from all the way back in December of last year. So that's about all I've got with that at the moment. But it's holding all of these supports, so that's a good thing. This has sort of done a sweep of the main range support through there. It's created more support at 411, so this is still pretty good. And as long as it holds these 400 levels and it holds this trend that's coming through here at about 424, as long as it stays above that stuff, you don't really have to think about it coming down to 354s unless it's just a sweep of liquidity and then a wick down and then back up maybe, but certainly not like a forever bleed anyway at this stage. Okie dokie, that's us. Like, subscribe, and all that stuff, and we'll catch you again on the next one. Cheers. Bye.